Hello, friends. When trading Forex, triangle chart patterns are some of the most commonly used chart patterns among traders. This video focuses on one of them, the Symmetrical Triangle Pattern. The Symmetrical Triangle Chart Pattern is widely seen as a neutral pattern because price can break out to either side. The market does not reveal an obvious direction at this stage. Buyers and sellers hesitate, and price gradually compresses as volatility fades. The Symmetrical Triangle Pattern is built around two key lines. The upper line represents resistance and is drawn by connecting lower highs. This line slopes downward and reflects increasing selling pressure. The lower line represents support and is drawn by connecting higher lows. This line slopes upward and shows that buyers are gradually stepping in. As price continues to move between these two lines, the triangle structure becomes more defined. When price breaks above the resistance line in a symmetrical triangle pattern, it often signals a continuation to the upside. These breakouts usually appear in two different situations. The first situation is a strong breakout. Price moves above resistance with strong momentum and increasing volume, often continuing higher without looking back. The second situation occurs when a pullback and retest form after the breakout. Price breaks above resistance, pulls back for a short period, tests the former resistance as support, and then continues its upward move. When price breaks below the support line in a symmetrical triangle pattern, it often signals a continuation to the downside. These breakdowns usually appear in two different cases. The first case is a strong breakdown. Price moves below support with strong momentum and increasing volume, often continuing lower without looking back. The second case occurs when a pullback and retest form after the breakdown. Price breaks below support, pulls back briefly, tests the former support as resistance, and then continues its downward move. Guys, now let's talk about how entry is made after an upward breakout, where the stop loss is placed, and most importantly, how the target is set. Price broke above the resistance line and did a short retest. At this point, the safest approach is to wait until the price confirms the upward move after the retest. Entry point. After the retest is complete, if the price moves back above the broken resistance line, the entry can be made at that moment. An increase in volume also confirms the strength of the move. Stop loss placement. The stop loss is usually placed just below the breakout, slightly under the support line. This way, even if the price reverses unexpectedly, the loss remains limited. Target setting. The target is calculated using the height of the symmetrical triangle pattern. The distance from the base to the top of the triangle is measured and added to the breakout point. The target price is determined as the breakout point plus the height of the triangle. This method allows the target to be set in a mathematical and logical way. Entry and stop loss are critical for applying the target safely. In short, entry is after retest confirmation, stop loss is just below the support line, and the target is calculated using the triangle's height. Guys, now let's talk about how entry, stop loss, and the target are determined during a downward breakout or breakdown in a symmetrical triangle pattern. Price broke below the support line and performed a short retest. At this point, the safest approach is to wait until the price confirms the downward move after the retest. Entry point. After the retest is complete, if the price moves back below the broken support line, the entry can be made at that moment. An increase in volume is an important indicator that confirms the strength of the move. Stop loss placement. The stop loss is usually placed just above the breakout, slightly above the broken support line. This way, even if the price unexpectedly moves back up, the loss remains limited. Target setting. The target is calculated using the height of the triangle. The distance from the base to the top of the triangle is measured and subtracted from the breakout point. The target price is determined as the breakout point minus the height of the triangle. This method allows the target to be set in a logical and mathematical way. Entry and stop loss are critical for applying the target safely. Guys, now let's look at cases in a symmetrical triangle where the price appears to break out but reverses, called a fake breakout or fake breakdown. Upward fake breakout. The price seems to break above the resistance line, but if volume is low or momentum is insufficient, the price quickly pulls back and returns to support. These false breakouts can mislead traders. If the price rises again after the retest, opening a trade is logical, otherwise it is a trap. Downward fake breakdown. The price appears to break below the support line, but if momentum or volume is weak, the price quickly moves back up. If the price drops again after the retest, opening a trade is logical, otherwise it is a trap. Things to watch in these cases. Check if volume and momentum support the breakout. Observe whether a retest occurs. Wait for confirmation candles. Set stop-loss levels before the breakout. Fake breakouts and breakdowns can be used correctly with risk management and patience. We will cover these kinds of SMC traps in more detail in our upcoming videos. Guys, now let's move away from theory and look at a real chart example of a symmetrical triangle pattern. On this chart, the upper resistance line and the lower support line of the pattern are drawn and easy to identify. Price is compressing between these two lines, forming the symmetrical triangle structure. After some time, price breaks above the resistance line, creating an upward breakout. At this stage, instead of entering immediately, it is important to observe how price reacts. After the breakout, price makes a short pullback and retests the former resistance as support. This behavior is one of the strongest signs of a healthy breakout in a symmetrical triangle pattern. The entry point is the area where price starts moving upward again after the retest. This level is marked on the chart. The stop loss is placed slightly below the broken resistance line, which is now acting as support. This helps keep risk controlled in case price unexpectedly reverses. The target price is determined using the height of the triangle. The height of the widest part of the triangle is measured and projected upward from the breakout point. The target level on the chart is based on this calculation. This example shows how breakout, pullback, retest, entry, stop loss, and target work together on a real chart within a symmetrical triangle pattern. Guys, now let's look at a real chart example of a downward breakout, or breakdown, in a symmetrical triangle pattern. On this chart, the upper resistance line and the lower support line of the pattern are drawn. Price moves between these two levels for a period of time, forming the symmetrical triangle structure. Then, price breaks below the support line, creating a downward breakdown. In this example, there is no pullback or retest. After the breakdown, price continues moving downward directly. The entry point is the area where price continues its downward momentum after breaking the support line. This level is marked on the chart as the entry. The stop loss is placed slightly above the broken support line. This level is used to limit risk in case price unexpectedly moves back upward. The target price is determined using the height of the symmetrical triangle. The height of the widest part of the triangle is measured and projected downward from the breakdown point. The target level shown on the chart is based on this calculation. This example shows how entry, stop loss, and target are determined in a symmetric triangle breakdown without a pullback, using a real market chart. Guys, now let's look at a real chart example showing a strong breakout and the uptrend that follows in a symmetrical triangle pattern. On this chart, the upper resistance line and the lower support line of the pattern are drawn. Price moves between these two lines for a period of time, forming the symmetrical triangle structure. After that, price breaks above the resistance line with strong momentum. Because the breakout happens with speed and strength, it is considered a strong breakout. In these situations, price often continues moving in the breakout direction without hesitation. In this example, price continues upward without a noticeable pullback after the breakout. This behavior shows that buyers have taken control of the market. Following the breakout, price starts forming higher highs and higher lows, which confirms the start of an uptrend. A trend line is drawn on the chart to highlight this structure. Strong breakouts like this represent one of the most effective outcomes of a symmetrical triangle pattern. Direction becomes clear, momentum increases, and price transitions into a trending market. This example shows how a strong breakout and trend continuation develop on a real chart. Guys, the information in this video is for educational purposes only. Nothing here should be considered investment advice. Markets like Forex, crypto, or stocks carry risks, and losses can happen. Please make your trading decisions based on your own research and risk management. This video is made to demonstrate strategies and help you learn. If you enjoyed this video, don't forget to give it a thumbs up. Subscribe to the channel to get notified about our latest videos and support what we are doing. Also, share your thoughts in the comments. Your feedback really helps us make better videos.